lending is a big deal. Like it's in the traditional space, it's a almost $7 trillion space, and I think all of financial services is close to 20 trillion, but 7 trillion of that is lending. And if you look at DeFi and lending on DeFi, it's almost 50% of DeFi, right? Like we're approaching 70 billion, and about 35% of 35 billion of those is lending.
Hi everyone, thanks for joining the show today. We have very special guests. We have Tob and Ant from Yield Credit. Yield Credit's a DeFi platform, and they're going to answer some of our questions that we have for them today. How are you guys today?
Good, Darren. Thanks for having us on.
Of course. Thanks for coming on.
I'm pretty good. London's not too cold, not too warm, and sun's shining. So all good my end.
That's good. Well, Texas is boiling right now. So I'm staying inside in the air conditioning. So, Tob, how did you get into crypto?
Crypto for me is sort of been money first, got burned, got in for the money, got burned. Well, I thought I was doing well, but then, in 2017 Q4, everybody was doing well. And just one quarter later, it became a bit more challenging to see what the horses were that were going to win. It seems like everyone was losing. So it was a challenging time. I came in when the market was red hot. I was introduced to it by friends. And over time, as the market started to go down, I didn't go in with too much money, but as the market started to go down, I started to spend a bit more time just understanding what I was doing and what I was investing in, like a lot of different people would have done, I would have imagined. So 2018 was when I really dived in and started to pay closer attention to, what the blockchain is, what type of solutions, it can provide. What are the interesting projects that are actually, have utility and have something that is helping in whatever industry it may be, but is actually helping people today. So over 2018, I got more involved. And some of the folks that are involved with Yield Credit now I've come to know over those years from 2018, 2019. That's really just how I got in. I was introduced to it. I thought I could make a quick buck. I lost a little bit of money, and then I started to use my mind a little more.
Yeah, I mean, I love Tob's honesty. I think everybody kind of got in initially for to make a quick buck, or pound where I'm from. But a friend of mine was involved in crypto. And spoke to me about it. It's like, oh, you need to jump in. Crypto back then was just unknown, there wasn't much information anywhere on it. And, I got involved in Discord, which was much more prominently used back then, as well as Slack, I think, as I mentioned once before. And I was literally just reading forums and chats and getting to know people, and finding my way around. And I got introduced to a couple of really good projects, and since then I've never looked back. Once you're in crypto, it becomes your life, and you go to sleep looking at crypto, wake up in the middle of the night looking at crypto, and your day continues, checking your phone, checking chats, and it continues. But similar to Tob, got in several years ago by a friend, and never really looked back.
How did you get in, Darren? I'm curious.
It's kind of the same story. I put some money into Bitcoin like around low 2000s, and then after it took off, I was like, "Whoa, what's behind this? Why is this happening?" And I had to like dig into it, and then you surround yourself with people that are into economics and stock charts and just everything, and I've just been obsessed. Really, I've been trying to find all the information I could with macroeconomics and just how blockchains work and like how that plays into economics and like what would they be doing where a bubble would be surrounding something that you know, like they're saying, like, don't look here. So I want to look here, and I just keep digging into it. And I've been obsessed ever since. And then when the prices jump up, then, you know, that's even more of a reason to be more obsessed. So it just hasn't stopped. So what exactly is yield credit?
So yield credit is a lending platform. It's a lending platform that's very much focused on three main areas, I would say. The first is that we're very much focused on borrowers, incentivizing borrowers, and that's quite different from a number of the platforms you'll find, you know, sort of operating in the DeFi lending space presently. Many of them, in some cases, even incentivize lenders. And what you'll come to find, or, you know, if you take a quick look at DeFi Pulse, and you look at some of the other lending platforms, is you'll see that there is more than enough capital, more than enough cash to be lent out in the market, right? That there's tons and tons and tons of cash, but there isn't enough borrowers. So you know, our position and what we've spent time focusing on is how can we get more borrowers? How can we incentivize more borrowers to participate in this utility that's lending? So that, I would say, that's the first category that sort of describes what yield is. The second category is the fact that within lending, we've decided to give the users as many options as possible, and in doing so, you know, we've differentiated ourselves from other platforms by saying, hey, if you're looking to lend, you get to choose how much you want to lend at, what rates you want to lend at. You're looking to borrow, you're also equally free to pick what rates you want to borrow at. Now, obviously, there needs to be some kind of meeting along the ways between the two sides to for a transaction to happen. But at any given time, you've got a series of offers, either on the borrowing side or on the lending side, with both users being free to choose what it is exactly that they want to lend or borrow at. So that's important. And then lastly, when you focus on the platform itself, you know, I think it's important to highlight that on yield, you're not interacting with the platform. You're not exchanging your tokens for sort of like a platform token that allows you to operate in that ecosystem. And you'll see that with a lot of our competitors. You know, you're interacting with a smart contract, right? So if you're borrowing, you're, you know, sort of using your collateral to interact with a smart contract. The lender is doing the same with the principal, you know, and your collateral is that very same amount that you put up as collateral is returned to you once you repay the loan. And for that reason, the platform, you know, at least we'd like to think the platform stays in the background as much as possible. We do collect fees, but those fees are used to purchase the yield token on the market and burn them. So the platform itself doesn't generate any profits. It stays very much in the background. You're only interacting with smart contracts. You're free to pick the interest rates that you want to lend at, and those rates are fixed. That's exactly what you're going to get at the end of the term. So you're picking the interest rates on the term, and we're focused on borrowers. So we like to reward borrowers by giving them the yield token in the event that they're able to repay a loan.
Okay, cool. So it's peer-to-peer lending. Can I set up like my conditions, and on the other end, somebody can, you know, agree to those conditions, and the smart contract gets.
Absolutely. So our interface allows you to set up an offer. That offer gets posted as a lending offer, assuming that's what you wanted to do. And if you're looking to borrow, you go to the borrowing tab, and you can see a whole list of lending offers, and pick and choose which one you want to accept. You know, what we've also found is that there's quite a lot of people that would come into our chats on Telegram and say, hey, you know, I can't find the offer I'm looking for. So, you know, if anyone wants to lend at this, you know, this amount with that collateral for that duration at that interest rate, you know, please set up an offer and I'll accept it immediately. And then there's a bit of a back and forth on, oh, I want to pay this interest rate, I want to pay that interest rate. So, there's some negotiation that happens in the community before the offers go up sometimes.
Yeah, that's a pretty cool idea. Do you have any competitors for peer-to-peer lending? I don't think I've seen any platforms that are like this.
I would call them negligible if there are there. And I say negligible because in a lot of ways, you see rates and people say, oh, you can make this much APY in that time frame, but really they're not fixed. Those rates are not going to be the same at the end of that whatever time period you keep your funds in that pool. So in that sense, to the extent they're saying yes, guaranteed rates, so to speak, it's not maybe guaranteed, it's not in the right conditions it's guaranteed. These are some of the things that when you read the fine print, that's what you find. So yeah, not a lot of competitors on the fixed rate. What you see is what you get at the end of the term from that perspective. Not a lot of competitors actually on the side of freedom to pick your interest rates and pick your duration without having the actual platform pick those characteristics for you. So not a lot of competitors that meet and tick the boxes that I just described.
But how do you offer fixed rates while other DeFi platforms fluctuate? Like that's just because of peer-to-peer.
So, I think as Toad kind of already alluded to, that some of these platforms, they say fixed rates, but they don't, in inverted commas, it's maybe fixed or fixed in ideal conditions. And like other platforms, that's like a lot of other platforms as well. Fixed rates with yield are fixed. Every lending platform today has rates that are dynamic. You'll see that it will have an X percentage APY, but you will never guarantee to get that X percent. In fact, you're almost not guaranteed to get that rate, especially when you consider the APY requires a sort of a year-long commitment, and those conditions remain more or less unchanged for that long. I think that's where yield really differs. There's kind of no ifs and buts. If you're going to get 5% at the end, that is exactly what you're going to get at the end of your period. So if you're getting 5% for 30 days, at the end of that period, you expect to get your 5% once that borrower repays. So I think that's really the key to bid around fixed rate. And a lot of people kind of advertise in fixed rate. I think yield is very transparent and makes it very clear this is what you'll get at the end of your term.
Yeah, that takes a lot of risk off the table. Just was being in like yield farming platforms, that the percentage really fluctuates with how many people come on board, and then also the token fluctuates in price. So it's really hard to determine, how much interest I'm going to get. It's just, based on. And then the other part of this is like, you're not really using these for an exchange either. So I don't have to worry about a permanent loss. It's just, I borrow and pay back and with interest. So I really like how, just simple and it works, it's a great concept.
Yeah. One thing I'll add to that, and I think it's interesting you bring that up. The fact that there isn't an exchange might also have consequences from a tax perspective, depending on where you are in the world. But, most jurisdictions I've looked at, the moment you release your tokens and you're getting something else in return, there's a chance someone could argue you've disposed of your token, and at that point, potentially you owe some kind of tax, right? But interacting with a smart contract and getting back exactly what you put in, and not another set of coins that are, that's, say for instance, sushi, say you use that as collateral, you're not getting another 30 or 40 sushi that you put into that smart contract. You're getting the very same tokens you put in. And I think that matters. I think that takes, the fact that you entered into a transaction off the table. And it just ends up being some way you can access liquidity without triggering any tax consequences. Just about every other jurisdictions I've looked at.
Yeah, that makes sense. That's a good point. It's like I'm not even getting the tokens that I put into the system. It's just some random token. So it's really, like, how would I prove that it's not a capital gains? It's not like I didn't sell it. It's just if I have the original tokens, there's some type of trail and proof. just gave up my custodianship over here, and now it's coming back to me.
Correct.
So what happens if I make if I lend out some money and I lend out some crypto and somebody doesn't pay me back? What would happen in that scenario?
I think the sort of base case example. I'm looking to borrow say $5,000, and I've got speaking of the token here, I've got ample that I want to use as collateral, right? So put in my collateral, and you, Darren, are kind enough to lend me the $5,000. The smart contracts hold my collateral. I'm able to collect the principal from you, and I go trading, and say it was a day like yesterday, I ended up not making money, and now I need to pay you back, but I don't have the full $5,000 for whatever reason to pay you back. So I think the first concept to understand in lending, certainly on our platform, and I think it's the same on every other lending platform on DeFi, is loans are over collateralized. So the amount of collateral you need to put up to be able to get $5,000 is far in excess than the $5,000 you're borrowing. So that gives the lender a lot of comfort that even though I don't know you and you're some wallet address on the other side of the world, I have no face to look at, nothing to hold on to, the chances are I'm going to get some kind of value back if you decide, or if you're not able to repay the loan. You'll find that given the over collateralization ratios, it's actually the case that if you don't repay, the lender might even be better off than if a repayment were to happen. So that extra cushion that's built in between the $5,000 I lent and the $7,500 worth of ample that I've had to put up, I think that even after we take out some platform fees, that could still put you, the lender, in a better position than if I were to repay the $5,000 in my example.
So do you have any plans on cross chain, like to leave kind of the Ethereum blockchain and kind of bring on other chains to your platform?
Our roadmap currently shows FTM on there, but we're also working away, busy working on Polygon. And once we're on those chains, we can have assets that have a chain link feed on there as soon as they literally read out to us. So we're working on that at the minute, and as soon as we've kind of done that bit, life becomes really easy as we just keep adding assets, who want to use it for the exact reasons that kind of Tobe alluded to before. Do
you have any plans for Flare integration? I know that the XRP community would really love that.
We are. I don't think there's any blockchain that isn't something we would explore. At the end of the day, I think integrating with as many different platforms as we can is what's going to allow us to sort of attract users and show people that yield, the yield platform can be something beneficial and actually just valuable for them to use.
Yeah, I mean, as Tobe says, the more options there is for users, which what yield is about, the better the platform is utilized, which means the better the product at the end of the day. So we're definitely open to adding as many people to the project as we can.
So is there any future developments that you could share with us?
Sure. Yeah, I can answer that as well. So it kind of nicely adds on to what we were just speaking about. So the real priority for us at the minute, V2 of the platform. That is probably the most important step for us at the moment, and a bit that I know I'm most certainly looking forward to. Reasons behind that, and I think it's almost as prevalent as it is now than ever. It's due to the gas fees. Everybody will be experiencing the hike in gas fees in a minute, and the automation of sort of lending and borrowing. So Phantom and Matic use EVM, which means everything fits like Lego. So you'll see yield on both Phantom and Polygon, or Matic as it's known, in addition to Ethereum. So as I said, you'll see that on the roadmap. It's much more important to add. They're not in any particular order. Everything in crypto kind of moves at different speeds. And of course, we're reliant on third parties. So they're actively being worked on. Which one comes first will be anybody's guess.
Yep. So if there was KYC AML laws, would yield credit be affected in any way?
The most important thing from Yield's perspective is to get our platform as decentralized as possible, and that's something that we're focused on. It's something that we're actively doing, and I think in the near term it's something that we hope to have in place. Once the platform is decentralized, and there isn't a corporation, there isn't any VCs behind us. We never did an ICO. There hasn't been a public-private sale or anything along those lines. As long as there isn't a central body, the question is where and who would be responsible for collecting such information. Like we're not a bank. We're not putting ourselves out to as any kind of central organization that would have that obligation to collect KYC. So I think once we're decentralized, the proper way to look at that is once we're decentralized, like how do you go about Bitcoin? How do you go about making sure Bitcoin can meet the requirements for KYC? Like it's difficult to do, and I think what it should be is that the owners should be on any user on the platform to self-report and say, hey, I've entered into a loan and I've received interest, and this is how much I earned, and this is how much I owe in tax. I think that's what's happening when you look at some of the the larger publicly traded corporations, the hedge funds that are now purchasing Bitcoin. They're putting out these documentations saying, hey, I've purchased Bitcoin, I've put it on my balance sheet, just letting shareholders, that this is happening, or investors if it's a hedge fund like Grayscale, like that's what decentralization is about. That's really the right way of going about setting up and using the blockchain technology, keeping it decentralized, and then from our perspective, and then putting the onus on the users. Now you've got transparency, now you're included, now you can participate in all these different decentralized apps. The responsibility is on you to make sure you're self-reporting and self-assessing as is needed in whatever jurisdiction you're in.
I've been watching Kevin O'Leary talk about like a virgin coin for Bitcoin, and then that just clicked how you said you can lend something, and then like it's up to the company, so they know what they're lending, they get the exact same tokens back, and all that's all going to matter. So like your platform would probably be the perfect for institutions as well.
Yeah, I think so.
Do you guys have anything else you'd like to share with my audience?
Well, I think from my end, and if you let me go first, and then maybe you can add a few words here. I think that the key thing to take away for your audience is we're a community-driven project. As I mentioned, there isn't any corporations behind us. We've built everything, basically from scratch with folks that are spread out across the world. We've all sort of come together on Telegram. There's a number of us that have sort of known each other for years now. And when we started, I would say our Telegram group had about 40-50 individuals, right? So that's just, again, to give an example of how spread out the contribution has been to get us to where we are today. And our goal has always been to sort of stick to the DNA of what the blockchain promises, right? And that is get as many people involved with what we're doing, be transparent, and give people as many options as possible to be able to use what you're building. So, and you'll see that DNA sort of run through how our platform works. Users, borrowers, and lenders can freely pick whatever interest rates they want to lend or borrow with. The platform itself stays in the background. Yes, we charge fees, but all the fees are used to buy back yield and burn it. And in and around that P2P, what you call P2P, we like to call it individualized interaction between lenders and borrowers. You're getting the freedom to pick and choose who you interact with and at what rate. And I think that's something that's missing in the market. And the reason why, just lastly, I would highlight that is important is, lending is a big deal. Like it's in the traditional space, it's a almost $7 trillion space, and I think all of financial services is close to 20 trillion, but 7 trillion of that is lending. And if you look at DeFi and lending on DeFi, it's almost 50% of DeFi, right? Like we're approaching 70 billion, and about 35 billion of those is lending. If we get lending right and we make it fair, and we make it so that, being in a pool and having, larger players come in, to reduce what your return would be over a longer period of time as you have on other exchanges, if we can get rid of that, I think we'll have a good basis to start to iterate and build other instruments on, other financial instruments on, that can bring value to people. So again, our DNA is important. We want to make sure it's inclusive and people have options. And we want to make sure we get lending right. And we believe the individualized way we've set it up, and the fact that people can rely on the returns that they see when they enter into their loans for a particular duration, is a good first step.
I think I'm definitely not going to say as much as Toad, but I think Toad's really highlighted some of the real positives of yield, and I think it's really important that users remember that they choose that interest rate, so they can choose what they lend at, and that's really important because it's giving them the freedom. The other thing, I was having a conversation the other day with a pal of mine who was trying to understand yield, and he said after I explained it to him, he said, everybody runs around looking for the best interest rate on their savings account, yet everybody leaves their crypto there, just sitting there. Why don't they? It almost seems a no-brainer, and that, it made me chuckle. But that's the important thing with yield. Once you've understood what yield is, the fact that you can earn something from having your crypto sitting there, and the risk is minimal to you. And as Toby alluded earlier, in a worst case scenario, you could end up with a little bit more if the loan was to fall through. But you can earn something. Everybody runs around looking for the best interest rate on their savings account, but yet they just leave their crypto sitting there doing nothing. So for me, that's mostly the really important point for me. We also had no ICO. This is a complete startup from the beginning, and Toby and I have seen it kind of grow from the beginning, and it's been really great to watch. So here we are with a platform, some exciting stuff coming ahead. We're addressing the fee issue. So I'm really looking forward to kind of seeing the project grow and the next steps, and users get rewarded.
Just being able to have that fixed rate and be able to set up my own conditions if I want to. That doesn't exist really. I haven't seen anything like that. And then just the way you guys are going about it. And then plus you have a huge collection of Ethereum assets too. So it's not, I have a broad range of everything. And then, like you're saying, it's what's the point of just holding something when I can earn interest on it?
Most other lending platforms, especially the ones you want to be on that are large enough, have, decentralized autonomous organizations that essentially have a series of requirements that you need to meet before you can add your particular token to that platform as something that can be lent out or used as collateral, right? And I think that particular roadblock, if you like, and it is a roadblock because it's incredibly expensive to get on some of these platforms, to buy enough tokens to get the votes. And then there's some lobbying and some politics that happens on the background as well. It's time consuming. You need a lot of clout and you need a lot of money, and it's, in a lot of ways, it's similar to to what centralized exchanges used to ask projects to do back in 2018 before Uniswap came about. But today, Uniswap's been around. All of a sudden, all you need is just a pair and some liquidity in a liquidity pool, and all of a sudden you're on an exchange. And I think that opened up the market in such a huge way when Uniswap did that, by just reducing that threshold that you need to bridge to be able to get listed on an exchange. And in a lot of ways, that's what Yield is also trying to do. That's why we have so many assets available, which is, all you need is to get a Chainlink reading. We need the price data, the price data information to be accurate, so that we can at least track when, your loan is underwater, or what the value of the asset is that you're collateralizing. But if you have that and you're willing to add liquidity, you can basically add yourself onto the Yield platform, and your holders, your community can now use their tokens, lend their tokens and use them as collateral, which is just an added utility, right? So opening that gate in the same way that Uniswap has for exchanges, you'll find that on our Telegram group, we call ourselves the Uniswap of lending. That's pretty much what we're trying to do, on the lending side. And we hope it has the same effect Uniswap had on the market.
Yeah, I didn't even think about that. That's a really cool thing, and any developer can really put their coin on your platform just with very minimal things, right? The chain link, probably everybody has that, right?
Yeah, it takes the hurdles away, and that's, I think, the point of this, especially for projects that are starting up and trying to get out there, they don't want to pay those huge fees, or they haven't got those funds to pay huge fees. And that's the important bit. We spoke a few times about freedom, and Yield gives the users freedom, but it also gives other platforms freedom to be able to leverage using Yield as well, without having to worry about how do I get on this exchange? What are they going to require from me? And that was a massive hurdle for a lot of projects early on. So it's another option for projects without thinking about those massive fees that sometimes are charged. And if they use those fees for being listed on an exchange, it's almost like, that was part of our marketing, or this was part of our other fees that we had set aside. And all of a sudden, you find the projects were struggling. So definitely about giving users and platforms more options.
Is the yield credit token like is it a governance token? Like if you're saying there's no DAO, like isn't the governance token like I vote on a platform? Does the yield credit token have a vote? Is what I'm asking.
No, there's no votes. It's not a governance token. We don't have a DAO. The yield token itself has a utility. You can stake it on our platform. I believe 50 yield can be staked, and if you do, you get favorable over collateralization ratios, and you get a discount on fees that the platform charges. And there's fees that are charged on principal, on interest, and if you are liquidated or you default on your loan, there's a fee that's charged there as well. So getting favorable rates or discount is something that you can obtain if you stake your yield token. The other thing that's important is, and this may not be seen as a utility, but it's nonetheless very important for how the dynamics of the platform works, is the yield token supply is dynamic, right? So it goes up and it goes down. It goes up when someone repays the loan and they're given the right to mint new tokens. And then it goes down as we charge fees and buy back tokens in general and on the exchange and burn them. So we need that burning feature to give value to the minting feature. And both of those are carefully, the value that's given to the minter or the amounts that we charge for fees so that we can burn. We've picked those values, sort of carefully to make sure that there's an equilibrium between the two, allowing for no excessive inflation or no crazy deflation, which in both scenarios wouldn't be healthy, a healthy thing for the platform. So there's a lot of thought that has gone into what the the token should be used for. It has utility towards the users, if you like, but it also has an important role to play on the platform itself, just to ensure that when we say we're giving borrowers value, we're incentivizing borrowers, what we're giving them is actually valuable and isn't just a race to who can sell their tokens fastest. To get to a zero price type thing. Hopefully that makes some sense.
Yeah, that does, and that's exactly what happens with a lot of platforms. Is you get paid in the governance token, they give you a really super high percentage, and then everybody just dumps it, so it goes to nothing quick. So that's a really good way to look at it. If I'm holding the yield credit token, I can get better rates. So if I'm actively using it, why wouldn't I hold on to it? I want to use the tokens for better rates.
Right.
So that's cool tokenomics. It's a good way to set things up.
I have a question, Darren, about XRP, since you're the guru. What is is there any, would it be possible for a wrapped version of the coin to be available on Ethereum as a bridge between, looking at Flare and also making it accessible to our platform?
Yeah, so I think WANSwap's got an ERC20 of XRP, and I think they had to do that just to bring it on the WANSwap platform. So if it's on WANSwap, there's both addresses. I'm not like super into the technical aspect of this, but I think because there's a WAN WXR20 address and an ERC20 address, then that would be possible if there's the ERC20. But I think the custodianship is in WANChan's foundation. Right. So I think I'm not positive about that. What are you saying? Like that would work if there was a chain link integration?
Oh yeah, I mean, at the end of the day, if to the extent you have an ERC20 token that's got a chain link feed, so all you need is a wrapped version. I mean, whether it's REN you use, however you decide to wrap, the XRP token. If we're dealing with an ERC20, a token basically on the Ethereum blockchain, all you need is that price feed, and all of a sudden you will be able to lend out your XRP or use it as collateral. So it's more of a call out to the devs. It's more of a call out to the XRP, community is, hey, let's get that wrap token, in place. And if it's something that already exists, then let's look into a chain link feed. And if we can get there, then I think we've pretty much got no obstacle to getting XRP listed. So I'll put that out there. Maybe it's something.
Yeah, that's a great idea. So if anyone's watching this that knows how to do a chain link integration into the ERC20 version of XRP, what they're saying is we're able to put our assets on yield credit, we're able to borrow, we're able to lend and set our own conditions. So if anybody's watching this and they want to figure out how to do that with me, just send me a DM on Twitter and or wherever, and we'll try to set that up. I wasn't even thinking about that. If when you were talking about chain link, I didn't even realize that. Yeah, it's completely possible.
Yeah, it should be. It should be. Right now, lending is it's sort of been put out there as this exclusive thing that only, the largest, and XRP has a very large community, so I'm sure it could afford to do it. But really, lending is just the beginning of all the other things that could happen if we get it right, if we make it inclusive. And so, yeah, no, if you are either on an Ethereum blockchain or an FTM, if you're on that blockchain or on Matic, the idea is to get as many different developers looking at our way and say, okay, you spent time building this idea, you have utility that's connected to your idea. Why not think about lending? Why not make it easy for your community members to hold your token longer while they're making a bit of money on the side, lending it, converting it into liquidity so they can trade and then repay their loans. I mean, I think this is utility that every single developer should be able to check a box and just add to whatever it is they're building. Yeah. That's where we're trying to go.
I think Toby makes a really important point as well, just sort of generally talking about crypto, is a lot of communities always kind of, we've got some of our sellers selling, some of our token holders selling because they want to jump into something else. Or, how do you reward your holders? And for me, this almost kind of helps them, for those holders that have held and they're strong holders and they don't want to sell, but they've seen something else they want to do. This gives them that opportunity. So it's almost kind of giving a lot of projects, community, another option, an incentive to hold, and giving them an option when they're holding. So for me, when I think back to some of the projects that I know I've been involved in and bought tokens in, if I had been given that option at the time, saying, I know developments happen, I know this is a great project, I know this is going somewhere, do I sell my tokens now and buy back later? That alleviates all those kind of thoughts and helps you to become a holder that holds your actual tokens without thinking, I could have bought this, I could have done this. So again, it's just giving holders an option, and mostly really help and support a lot of communities that are building and are developing, and their community know that. But it just allows them to hold and give them option with holding.
Yeah, just with the bull market, and it's like, you want to jump into every coin, but I don't want to sell every coin. And then also on top of it, like, that's a taxable event every time I sell something. So I'm always taking that into consideration. If I could just, get a loan on something, and I know I have a really strong feeling something's going to work out for me, and I make money, I can pay back, and then I'm getting the original tokens on top of it back. So there's really, there's no sale going on. It's just I'm lending and borrowing, and the wallet address changes, but it comes back to me, and it's exactly the same tokens.
Yeah,
it's the new hodl.
It is
the new way to hodl.
Yeah.
Even just the volatility it'll take out. It's not going to take all the volatility out of the market, but the volatility it'll take out, the percentage of that it'll take out of people just selling because, for short-term plays, like that's already enough to move us quite a bit forward as a space, not just any specific token, just as a space, for people not saying, oh yeah, it went up 60% today, but it's probably going to go right back down 2 or 3 days later. There's this association with crypto that it's so volatile. And I think this is one of those utilities that, lending specifically, that sort of stabilizes things out and allows, eventually will allow larger investors to come in and participate because they're seeing that stability, a bit more than they have in the past.
Yeah. And then also just from a lot of times I'll sell a token and then it jumps up in price after I sell it. So with yield, I can keep my tokens and still trade, and I don't have to worry about that.
Yeah. And with the likes of Phantom and those platforms coming in, it just makes it that much cheaper once those to sort those gas costs out and things like that. So for me, it's a win-win.
If I want to use the yield credit platform or learn more information, where would I go to find this information?
Sure. So you can jump in our Telegram. You'll find Toby and I there, and a lot of our community members and other admins. And you'll also find if you've got more technical questions that me and Toby just kind of look at each other and think, we need our lead dev to answer. Coiner, who is the lead dev, is also in the Telegram. So if you've got questions that are more technical, feel free to jump in the Telegram. You can ask him; he's available. And also, you can ask us any questions in the group. The community is pretty friendly, so don't feel shy to join. Everybody's happy to kind of tell new people as they're joining how to use the platform and help them through it. So jump in our Telegram. There is a Discord channel. So feel free to come by and say hello.
Well, thank you for coming on the show. I appreciate your time and informing our community about yield credit and individualized loans. I was about to say peer-to-peer, but I changed it to individualized loans. And yeah, thanks for coming.
No problem at all. We are, like I said, if you've got any questions, feel free to jump in the channel. Toby and I are also, actually, I should share this. Toby and I are also about to launch our podcast. So we've got some guests joining on there that are already lined up, but we're going to be talking DeFi, crypto, yield, and really helping, users understand yield better as well. So we'll be covering topics about how to use yield, the advantages and what have you, but also just helping people understand crypto better in the DeFi kind of community and what goes on. So that's called Agents of Yield. You can find us on our Twitter page, or jump in into the Telegram, into Yield's Telegram, and we'll be available to help.